Thanks for tuning in to another episode of My Next Property. My name's Steve Ash. I'm the founder of Property Strats. I've built an 8-figure portfolio. I'm an ex-vice president at Goldman Sachs, and I'm helping everyday Australians do the same thing. Okay, this is our last podcast for the year. I thought we'd do something a little bit different to what we usually do. So we're going to kind of have a bit of fun. We'll have a look at sort of some predictions for 2026 and how the property market's going to perform there. So we've done quite a bit of research for Property Strats and obviously looking at some of the reports out there. We're going to combine some of the learnings from those reports and also some of the proprietary stuff that we do within the business, and then start having a look at areas which we're not going to look at it from an investor mindset. I'm going to cover that towards the end of the session, but we're going to just kind of look at the numbers, the data, and look at those areas that they're just going to perform quite well. Whether you should be investing in them at the moment, that's a question we'll talk about towards the end of the episode, but let's just kind of look at the data as it is. And on that, we've got a couple of things coming. We've actually got on our website at the moment, we put a hotspots report for 2026 on there. So go across the website, propertystrats.com.au, and you can download that. And as of next year, as part of this pod, as part of the hotspotting series, we're going to look to put out a monthly report, which you can sort of like, we'll put the link in the show notes to that, and we'll just give you an idea, a barometer sort of like on the markets across Australia, some of the areas where we see a bit of value, and we'll keep that as a monthly report. So you'll be able to download that and get that info, and that'll all be free. So we'll get into it now. We'll go into 2026 in a second, but first up, I thought it'd be good to have a look at how 2025's done. And I'll talk about obviously some of the areas that we've been going in. You would have heard me on the other sort of podcast talking about Melbourne and Sydney and these type of areas from the value play here. So we'll get into how well they performed. They definitely underperformed some of the other areas, but we'll go into that, why that is the case. So if we go and have a look, and I'm just going to go through them one by one. I've got everything written in the screen. It's not going to be kind of in terms of capital growth or not. I'm just going to go right through the ones that we've got. So we'll start with Perth. And so Perth is up 12% for 2025. Again, incredibly strong market. Now, just actually off camera, we've just been talking in the studio about how well Perth has been doing in the last 3 or 6 months. It was a little bit, quiet towards the start of the year, but still like prices accelerating towards the end of the year. Can the first-time buyers grants, we've done a few podcasts talking about the impact of that. And that has continued to sort of propel the markets through. We'll talk about the outlook for 2026 in a minute, but Perth is still going really good guns at 12%. Strong market. We've obviously seen the units do really well there. We're looking at kind of units in likes of Victoria Park and those type of places with an 8% yield this time last year. They've grown significantly over the year, and houses are still very tightly held. There's only 3,000 stock on market there, which is extremely low for Perth, and anywhere in good areas are going for big prices, usually on the first open with multiple sort of interested parties. So Perth is strong grow at 12%. Brisbane next up, 12% as well. Brisbane was pretty flat towards the start of the year. Sort of any investment grade properties were doing okay, but towards the end of the year, again, with first home buyers grant, it's done incredibly well to 12%. Next one's an interesting one. Sort of, I've been quite vocal about Darwin, sort of maybe opposing Darwin rather than sort of like extolling the virtues of buying there. But Darwin has done 17% this year. Now, to be fair to me, like when we all know that this was going to happen, like there's been a big push on podcasts. We know there's lots of buyers agents have been buying up there. We'll look at sort of for the outlook of 2026, why that might be happening on a fundamental basis, why Darwin's an interesting place to sort of consider. But yeah, 17%, that's incredible numbers. And looking at it last year, we did think something like this was going to happen, but I am pretty reticent about putting people or kind of recommending Darwin basically just because it's a boom bust type of place. Regardless, people who bought in Darwin, I'm happy to hold my hand up and say, okay, you've killed it. You've done really well. Really good equity uplift there. So 17% is great. And then one of my top picks, Melbourne's done 5% in the year. So it's an interesting number. Like Melbourne's basically been flat for most of the year, but there has been sort of markets within markets that have done incredibly well in Melbourne. I've obviously talked about a lot. So if we take, say, Frankston, for example, I know a lot of the deals that we've been getting. So while the Frankston market's probably, I don't have the numbers in front of me. I think it's around 8-9% it's done year on year so far. Like there's markets or pockets within Frankston that have completely outperformed that. Same with places like Seaford. Broadmeadows has done well. Narre Warren's done well. Berwick's done well. And so I think what we're seeing with Melbourne is going to be slow and steady, and it's going to perform well over the next 5 to 7 years. If there is a government change there, I think the elections are next year. Forgive me if I got that wrong, but that could be a proponent that does unlock the value in Melbourne. So 5% is one of the laggards in the list. Sydney, 6%, so solid, not doing too bad. I still think, we've seen a rate decreasing cycle over the last year. That could change, and we'll cover that in 2026 in a second. But Sydney and Melbourne were the markets I've primarily been looking at for clients. Up 6%, so solid, nothing, not shooting the lights out again. With the first home buyers grant, we've done a pod, go and have a look at that, where we kind of covered like why, and those markets in Sydney where I think there's good opportunity. We'll go and have a look in 2026 at the moment. Adelaide, 8%. So Adelaide's been one of the star performers over the last few years, and it's done incredibly well. Maybe lagging, well, it's lagging Perth, Brisbane, and obviously Darwin in this list here at the moment, but it's going to be a slow and steady market. Again, we'll cover that in a second. Hobart has been the laggard of the list, only 3% up in the last year. Hobart's an interesting one, and Tassie in general. I think 2026 is going to be an interesting market there. There's not many sort of things that I'm seeing for the boom there, but looking at data and looking at kind of how things work here, I think Hobart's going to have an interesting 26. We'll cover that in a second. Canberra's been pretty flat as well. The other laggard, so 4% in the list. And yeah, pretty flat. We've just done a poll on Canberra, so you can go and listen to that and get my views on it. And then lastly, just we'll put one regional place in there because I'm actually recording from there at the moment. Gold Coast up 18% this year. So anyone who's invested in the Gold Coast, well done. I still see quite a bit of value in the Gold. So you just have to look around the place, all the infrastructure that's coming up. We're going to do a pod on the Gold Coast soon, but there's a lot of infrastructure projects happening with the Olympics in mind, really good schools here. But every time I come down here, it's busier and busier. It's absolutely pumping up here in the Gold Coast. So that's what we've seen in 2025. So let's have a look at 2026 now. Okay, so we'll cover the kind of regions in a second, and we'll go through it in the same sort of order that we just covered 2025. So from Property Strats, what we're thinking about, my own sort of perspective on how we're going to see sort of the property market in 2026, I still believe it's going to be pretty strong. And there's a number of factors why. I mean, it does seem that we've been in this perpetual boom really since 2019. And there's many reasons for that. But I don't actually see this stopping anytime in 2026. I've talked a few times on a podcast potentially about views on a black swan event that could change the rhetoric at some point, but I don't see that happening next year. In fact, I think if anything, we're going to see the same carry on that we've seen at the end of 2025 coming into the 2026 market. So the few points I wanted to talk about. So obviously we talked about interest rate cuts coming in this year, and we were kind of thinking for most of the year we're going to see further interest rate cuts, the economy maybe a little bit weak, unemployment tracking up a little bit, but the inflation numbers came in hot last month in November. We were recording this in December 2025 at the moment. And so I think, if anything, we're going to see some headwinds in the form of rate increases rather than decreases coming through. We just had the rate announcement this week. RBA's decided to keep them on hold, but they were quite hawkish in their comments. These things can change so quickly. A few months ago, we were thinking we're going to see more rate cuts towards the start of next year. I think, if anything, we could be looking middle of next year. Then we might see rate increases come. I think maybe the wise thing for the RBA to do would be to get that inflation under control, to go quite hard. So we might see that rate cut. So I think that might give that headwind into things. So, but we've kind of done this research thinking there were going to be more. Obviously, that was going to be more fuel to the fire there. So that's going to be interesting how that plays out. Obviously, interest rate movements kind of, if increasing, it shows the strength of the economy to some degree. If they're coming down, some weakness, but that's obviously good for house prices, etc. So it's going to be interesting how that plays out. Secondly, and we've done a series of pods on this talking about the first home buyers scheme. Now, this is an interesting policy from the federal government, and I think it's probably going counter a little bit to what they're looking to achieve. And it's just been like tinderwood to the fire, and the property markets have just been absolutely smashing it since this was announced in the 1st of October this year. And there's no sunset on this at the moment. It's still in effect. We're seeing a few clients who've come in who've kind of, made use of this. Why wouldn't you if you're kind of trying to get on the ladder? But when we look at that sort of like avatar of first-time buyers, it's not just, people out of university in their early 20s. There's a good proportion, but it's people in the 30s who've got good savings and aren't on the house ladder, and they're actually going in and looking. If we look at those kind of boundaries, so I'm not going to cover them all, but in Sydney up to 1.5 million, for example, Brisbane up to 1 million, if people can get 5% loan, and there's reduced stamp duty in those bands, they're going to do that. That's going to carry into next year. And all of those markets, go and check out those pods, which I talked about with the various bands. They're going to continue to do very well. So while we've got this rate sort of potential increase, we've got the first home buyers grant, which isn't going to sort of suppress house prices, in my opinion. Next point, number 3, we're still seeing that population still growing faster than completion rate. So it's been this problem with supply over the last few years, like the government's desperately been trying to fix it. They've done, I mean, the completions are quite good this year, 180,000 dwellings when the target was 150,000. And so they've increased that, but they're still well behind the schedule there. We're still expecting sort of like big population increases, looking up to sort of 390,000 in the reports that we look at here in 2026. And so still, like, while the kind of completions and that's going well, still not keeping up with the demand and the population growth that we're seeing. And it's really that population growth and migration that coming into the country is still going to propel sort of like house prices forward. And so this shortage is just endemic at the moment. It's just not going to change anytime soon. There really needs to be a policy change. The only thing that's really going to stop this and really put a headwind into this is building properties. And I don't see that changing anytime soon. So we're going to continue to see tight rental markets like property. If we take Brisbane, for example, going to state by state, you're not seeing the same level of cranes in the sky building high rises or whatever apartments coming in. There's going to be that constrained stock, and that's going to play out into 2026. And that's kind of one of the big thesis why we're going to continue to see price increases. Number 4, rental crisis. So we're still, like, Melbourne's probably one of the only areas where there's not a rental crisis, there's enough properties there for people to rent. But still, we're seeing tight vacancies. Perth's below 1%, Adelaide's below 1%, Brisbane's around that 1% mark. So it's extremely tight. And so that's another sort of theme. Again, number 5, chronic underbuilding. For developers, we've seen this in Sydney, for example. A lot of FISOs don't stack up. We know high rises aren't being built, and that's going to continue on. Sort of like a lot of feasibilities for developments don't really stack up. So there's still going to be not too much building that's going to be happening across Australia. There's not too many incentives to happen. So we're not going to see that additional supply going in, as I just talked about, that's going to come into the market, which needs to happen to start putting a floor on sort of some of these price increases. Another factor that I think we'll see is affordability, and it will be that case kind of lower to middle type properties. Affordable properties will continue to do well. This is the thesis around sort of like buying in Melbourne, buying in Geelong, these type of areas where there's a flight to affordability, where you can get houses on land. I think that'll continue. Also, there's sort of like the story around sort of attached dwellings. It's something I've talked about a lot. Townhouses in good locations like units. Units are so cheap in some areas, and it makes a ton of sense in my mind that they'll continue to do well. Certainly, we just talked about in 2025, the Perth units have done well. They've done well in Brisbane as well. So that'll kind of that middle, lower end sort of price points, they will do well in 2026. And lastly, number 7, like looking how the economy's going to go. Like it's an interesting time where unemployment's coming up. We've got the advent of AI, how that's going to potentially impact things in Australia, etc. So it's going to be interesting to look at that. I don't think that's going to cause a problem for the housing markets like in 2026. So anyway, like I've just covered a number of points. It's really kind of like the same old as for 2025. The kind of like drivers for property increases are still there, and I think we'll still have a pretty solid run into 2026. So what I wanted to do now is just cover the various regions. We'll go through the same order as 2025, and I'll give you some of my viewpoints on how they're going to perform. Right, so here we're going to start with Perth again. So Perth has been one of the standouts for 2025. It's going to be the same sort of case for 2026. All the drivers are there. There's still hardly any stock on the market. The interstate migration is the strongest in the country. So population growth at 2.3%, incredibly strong. So that's just going to lend into sort of more demand for housing. There's just not enough supply there, and this is just going to propel Perth onwards. Going on to that sort of supply, there's a massive undersupply. Still, I think 30,000 dwellings needed to sort of cope and keep up with just this level of population growth that we're seeing. Vacancy rates are still extremely tight there. Like, we're not hearing those stories of like 40, 50 groups turning up to sort of like inspections as we were a few years ago, but still like properties, we're seeing massive rental growth still in the area in well-located properties. So still a factor there. Resources stacks is still looking pretty strong. And as I talked about, listings still well below the long-term averages. So all the kind of ingredients are there for another good year in Perth. So again, I talked about this at the top of the pod. I'm looking at this on how I'm not saying you should buy in Perth. I'm going to cover this at the end. I'm just saying I'm seeing double-digit growth for Perth next year. It's going to continue. I can't see any reason why that would slow. And so if we move on to Brisbane, I think it's going to be the same sort of thing that we're seeing in Perth. It's extremely tight supply here. On the ground, what we're seeing, it is remarkable. It's still in those kind of areas that are under 1.1 million. If in the housing market anyway, between 800,000 to 1.1 million is absolutely going off. And investment grade property in a decent suburb, could be your Alexandra Hills, could be your Logans, even who would have thought Logan in the 900,000s, yeah, for going back, if we go back to the future into 2018. But that's what we're seeing. We're seeing 30, 40 groups going through, prices massively overbid to even surprising the agents. I mean, still strong. We were looking at a property up in Callinga, close to the station. I reckon this would have sold this time last year for around that low sevens. I kind of had it priced. I think it was good buying up to sort of 850, 860. Again, I find that incredible in Callinga. Sold for 920. Unconditional offer as well. So Brisbane is just going to continue to kill it. I mean, we're still seeing a really strong interstate migration from other areas. There's obviously the weather's gooder here. You've got the attractions, the Gold Coast, Sunshine Coast on the doorstep, and the jobs. There's a vibrant economy. Lots of companies moving, domiciling. And in Brisbane at the moment, you've got all the Olympics infrastructure. We've done a pod on this recently. That's still going on. The dwelling completions are still lagging. Vacancy rates are low. It's going to be a good story for Brisbane still. In 2026, I still think those kind of attached dwellings, those units, those townhouses in good locations, they'll do well. Houses in the areas I've talked about, we've done a few pods on this now, in Redlands Bay, Logan, North Brisbane, also Ipswich as well, I think will continue to do very well. Now, Darwin, we talked about Darwin, how well that's done. It's going to be the same old story. It's going to do well. There's good infrastructure projects in there. You've got the Barossa gas project uplift that's happening there at the moment. It's creating a lot of jobs. A lot of first-time buyers are active out in the area at the moment. So that's good. There's decent wage growth, but there's also very solid interest, obviously, from investors up there. Investors chasing really good yields, which you're still getting there. Properties are very tightly held. And so I'm seeing double-digit growth at Darwin as well, and it'll recover strongly. So another strong sort of prediction there. So we'll go on to an area I've talked a lot about over the last 2 years, Melbourne. So Melbourne, I don't think is going to perform as well as the other areas. I still think the value is really in buying in these areas where they're right at the bottom of the cycle. But we're kind of predicting steady growth for Melbourne, sort of like maybe single digits, lower single digits to mid single digits. The population's still growing, but they're probably the only of the major centres where there is a maybe potential supply consideration would be Melbourne, particularly on the north side, the western side. There is land galore there. There's a few development starts that are happening there. So that supply is on the market and is causing those areas not to perform as well. But there's still very good pockets in Melbourne where we're seeing a lot of value. Just done a pod on Geelong as well, and I think Geelong is going to outperform Melbourne potentially in 2026. But I think it will be a case of slow and steady. Again, the story is going to be on affordability and looking at those areas where you can get houses with decent plots of land. I'd say anywhere with the first home buyers grant, anywhere up to 900,000 is going to be what to look at in Melbourne, especially if there's not too much supply there and the land's constrained. It's an established area. They'll do well. Again, same sort of rhetoric with units. I mean, the value in units, got to be very careful. We're not talking about South Bank or in the city of Melbourne. We're talking about in those kind of blue chip areas where you can actually get some pretty cheap unit plays with good yields. I think they'll do pretty good. So Melbourne, slow and steady. Same sort of item with Sydney. Again, like Sydney's obviously very expensive. Population growth is lagging some of the others in the list, the likes of Perth and Brisbane, but it's still slated to be pretty good. Supply is coming down a little bit. It's the same sort of story, not as kind of prominent again as the two areas I just talked about. There's a rise in listings in the area, which could be construed as bearish, but still think those affordable sort of pockets and those affordable type items, it's a very, very good buying opportunity. You don't want to be chasing those areas that are absolutely thumping at the moment. You want to be getting in where there's good opportunity to get good discounts going into deals. And I think Sydney does have those sort of value plays. I mean, I've talked a lot about the value of Sydney units. I think they're absolute gold if you get into the right suburbs there. But I just wanted to call out what's happening out in the west. We're getting closer to Badgerys Creek opening, and there's good value, I think, in those Western Sydney sort of pockets, the likes of St Mary's. You've got the train line there that's going to connect into the kind of Hills District area. So the likes of St Mary's, Penrith, Mount Druitt, potentially all going to perform well if you're looking for that house type play, maybe even a Blacktown. But again, units there. Also with Sydney and New South Wales as well, I think there's good value up in the regions, up in the Central Coast, that northern Central Coast pocket where you're maybe an hour south of Newcastle, hour and a half north of Sydney, like Wyong. I think that's pretty good areas to look at. And then also south towards Wollongong. I think that's going to be, some not going to see outperformance there by any stretch of the imagination, but there's bloody good value in buying in those areas. If we move on to Adelaide now, Adelaide's again, it's going to mirror sort of like, in my opinion, this what we've seen with Brizzy and what we've seen with Perth. It's going to be double digits again. It's the same sort of story. I feel like I should have recorded a macro and then just put this out here. But again, strong scarcity in supply, completions well below the projections of what they're wanting to do and the averages. So again, constrained supply is going to cause problems here. Again, very strong economy there. Good jobs coming up, and defence renewables doing very well. In Adelaide, vacancy rates are so tight there. So vacancy rates are around 0.5 to 0.8%. So we're going to see that rental growth as well. And the population growth, while maybe not as high as Perth and Queensland, particularly Brisbane, is still going to be pretty stable, healthy. So I think Adelaide's going to be, steady, good market to invest in. And it's going to continue that sort of good sort of growth run that we've seen for the last 3 to 4 years. Now, Hobart. So we covered this a little bit in 2025. And so again, it's going to be slow and steady, what we're thinking here. Hobart is now looking pretty affordable. And as a contrarian type play, I do know there's a lot of investors. I do know there's a lot of sort of buyers agents starting to look in the likes of not just Hobart, but Launceston, maybe Devonport, if you're looking for that sort of risky play. I think Launceston's got a little bit going for it. That's obviously in the middle of the Tasmania. I think it will be slow and steady, but if you do get in and you can get, say, a good property, good house on decent land content with a decent yield, it wouldn't surprise me that sort of Tasmania actually outperforms these sort of numbers. There's definitely going to be a lot of interest from investors in this area. So that's kind of what we're thinking at there. Canberra, we've just recorded a pod on this, so go and have a look at that. I think it's going to be pretty slow and steady, not too much happening there. Population growth isn't as high as the other areas by any stretch of the imagination. The supply situation's not too bad. The completions are pretty good. And I think, it's just a balanced market here. And there's no kind of real sort of job increases in the area. There's the unemployment's pretty steady there. So I think it's just going to be it's probably going to be one of the laggards again going into 2026. But from an investor point of view, that's kind of what I like to look at. I think there'll be good opportunity to sort of see what we can purchase there. So to finish up with, I'm just going to look at a couple of regional areas because it's quite topical where I am. So Sunshine Coast, did an episode on Geelong recently where the interstate migration is superseding the Sunshine Coast now. So I think Geelong is going to do well, but Sunshine Coast is still killing it. I mean, when I look at prices there and how well they're doing, it's obviously one of the best places to live in the world. You still got 2 hours north of Brizzy, and the infrastructure around that Maroochydore area, Buderim, etc., is pretty strong. So we're projecting pretty good gains for Sunshine Coast doing quite well next year. Whether there's an investment thesis to go there, I would kind of argue maybe not. But again, we're kind of looking at areas and how they're going to do. So to 10% or so I can see happening again in Sunshine Coast is crazy. As it sounds, obviously markets within markets there. So be picky if you are looking there and where you're going to go. And then in the Gold Coast, finishing off where we are talking from at the moment, population growth is still going really well here. It's a beautiful area to live in. There's a lot of positives, some really good schools here, good private schools, even state schools are really good here. Vacancy rate's so tight, it's about an hour to get into Brizzy, maybe not on the motorway as I kind of test to and I finish up and go back home. But you obviously got the train line, it's easy to get into Brizzy. Obviously you've got the Olympics infrastructure that's going to come and sort of propel the area as well. And there's not too many sort of apartment starts coming on. So I think Gold Coast is an interesting one. It's just whether you've got the budget to get in, I think is going to perform well, just like the Sunshine Coast and Queensland in general. If we look at some other areas like, far north Queensland, we've done a couple of pods recently on that. And Cairns, I think Cairns will continue to do well. And then it'll just be interesting, those other areas. But one thing I wanted to close off with, we've done the round the ground. So while we are going to, in my opinion, I've given the bull case really for 2026, like tailwinds that could come if unemployment does spike up, if there is a market event. I think it's unlikely that's going to stop or cause any problems to housing markets. Now, just because I'm saying Perth's going to do great, Brisbane's going to do great, Adelaide's going to perform great, Darwin's going to perform great, I'm not suggesting you should go in and just buy there. I think you need to be cognizant on what your portfolio is doing and whether sort of those assets are going to help you get to that sort of that next level. Because while these areas are going to perform well, the kind of the thesis to buy in Perth was the actual economics of the deal. You want to buy in cycles. I talk about this a lot. That's where the real money's made. If you're buying towards the medium to top of the cycle, yeah, you're going to get decent growth. And if your goal is if you've got a few properties and you're kind of spread around Sydney, Brisbane, Melbourne, wherever it might be, and you don't have exposure to whether it be Brisbane, whether it be Perth, whether it be Adelaide, then there's definitely a case to do that. If you're looking for that equity extraction to get that deposit to be able to go out and go again, then definitely look at these markets. Property strats, we're kind of more value investors and we're looking for value. We want to get in, we want to ride that whole cycle. We don't want to get in at the end. We were buying in Perth like in 2020, 2021. We were buying in Brisbane in 2015. We're early to the party there. So while these areas are going to do well, there is a bit of buyer beware on that one. And so if that is in your risk profile and you're happy to take that, then go for it. But really going back to the Perth argument, really those yields were pretty good when we were buying there for that sort of 5%. If you're looking at Mandurah and Greenfields and these type of places, you're looking at 7 to 7.5% yields. It made a lot of sense there because the deal economics looked good. Maybe the deal economics don't look as good there now. So I just want to make that differentiation between these are momentum plays. This is what I think the market's going to do, whether there's a value investment, whether there's a thesis to get in, whether it's too late. That's something you can talk to your team about, have a think about, talk with your partner, whatever it is. I would kind of argue that sort of like, it's a bit risky to get into some of these markets at the moment. You're also chasing it. It's very hard to sort of get a discount going into these deals. While there will be a momentum play for sure, you buy a property, settles like, 60 days later, for example, and you might be up, 1-2% already, which has kind of measured that in. There is an element of risk. We know some of these areas are boom bust, like the tear that Brisbane's been on for a long time has been good. I think it'll probably run into 2032. Probably those kind of growth rates have to come down. You have to look at those markets within markets. You can't just buy, say, south expensive areas like Morningside, for example, and expect to see that sort of growth. Those areas, I think, will only go so far. But those areas where there is affordability with the first-time buyers, I think they'll continue to do well. But you do need to be cognizant that potentially, like, we're coming towards the end of these cycles, and then 2027 might look very different. So that's why, from my point of view and from my portfolio, I'm looking at those undervalued assets. I want to make money going into the deal. I want to make discounts. I want to ride that whole cycle. But anyway, I'm going to try and wrap this up a little bit now. I just wanted to just have that little sort of on this data and kind of how you can actually pull opportunity from what I'm saying. But in summary, though, I hope you've got a lot out of this. In summary, 2026 is shaping up to be another good year for the property market. Be very careful. Look at kind of at your portfolio. Look at sort of cash flow numbers. Look at sort of whether you can hold if you're going to buy one of these properties. Still, like, the yields are looking pretty low across Australia now. And so you've got to factor in whether you can hold that, whether it could be something like cash flow type asset that you need to unlock that next purchase. It all comes down to portfolio construction at the end of the day and how these assets are going to help you get to the goals that you need to get to, sort of like 10 years down the track, 20 years down the track, wherever you are in your journey. Anyway, that's my rhetoric on how I've seen 2025 play out so far. This is what I'm seeing for 2026. It's December. Like, this will hopefully come out before the new year, but I'm going to do it. I'm going to wish you all a happy Christmas, good new year. Hope you got a lot of value for this. If there's any sort of ideas you want us to cover off on the podcast at some point, any guests that you want to talk to, let me know and we'll kind of look to accommodate. Thank you.